What's up guys, welcome to another interesting video. My name is Samuel, financial market analyst. In today's video we are gonna dive into a crucial aspect of trading that every serious trader must develop, and that is the skill of backtesting effectively. This is something that I look into every time I'm trading a new pair, or I want to check what the market has been doing in the past. So let's waste no time and jump into the charts. This is the US dollar versus Swiss franc, US CHF. Now there are different ways to do this, but what I'm going to show you is a different method that I have used in my trading career. When it comes to backtesting, there are most common ways that you can backtest using a simulator, but today we are not going to talk about the simulator. We are going to talk about other options, which is go back in time by using the trading view, which most people have access to given that it's free of charge. Now we will be looking at two types of backtesting. The first scenario is backtesting and observation. Now we'll be looking back in time to observe price action standpoint. We need to understand the liquidity and distribution. Let's see when is the best time to enter the market, when there's a lot of volume. Now we can see we have a big volume here. We need to know what time. To know the trading session, you can just type here session, trading session, then you will be able to see this session. Now this was New York. We had a lot of volume here. You can see the Asia, there was no volume here in the Asian trading session. The volume was too low. You can also see here the New York here. This time there was no a lot of volume. There's a lot of volume here, this Asian trading volume. Okay. Oh. Now we can see we have a lot of volume here, the London session. So we understand the London session is one of the best trading time. Now the second scenario that we shall be looking at, you can see here we have a lot of volume here. Now the second scenario that we shall be looking at is accumulation and distribution, and there are things that you need to consider. Now we have 4 stages in the accumulation and the distribution, and the first stage is accumulation zone. Here you can see that this is the first stage, the accumulation zone. This is stage number 1. Now stage number 2 is distribution. We want to see the price breaks out of the accumulation zone for the very first time. The price breaks, you can see here, the price break and closed outside the accumulation. This is the second stage, the distribution, break of this structure. Now The third stage is retest. Here, this is the retest. This is where you're looking to get involved in the trade. Now, for the fourth stage is the main distribution. This is where you get involved. This is where we get involved, and we will be using 1 to 3 ratio. You can use 1 to 2 ratio, but we shall be using 1 to 3 ratio. And see, one, two, three, yeah. Now, this is what I normally do before getting involved in a new market or in a new pair. You do the back test, and this strategy is one of the powerful strategies that I normally use every single time. We can see we have the first stage is the accumulation, where the market was in consolidation, this accumulation zone. The second stage is the distribution, where the market breaks this structure and closed outside this structure. Then the third stage is the retest here, and this is where you now look for to get involved, look for an entry. And the fourth stage is the main distribution, getting into the market. You need to familiarize yourself to a new market or pair, and there are pairs that can respect the market structure, but there are some that cannot respect the market structure. So you need to familiarize yourself. That's all I got for today, guys. See you next time.